Hello everyone, Larry Leverenti's for Ichimoku.co with a daily analysis for the SP 500 for the trading day ending Tuesday, February 11th, 2014. Well, a nice continuation of the trend to the upside today, a very, very bullish candle, continuing the series of higher highs and higher lows in this market. If you recall yesterday, we had this small bodied candle at the top of this fairly decent and efficient uptrend that the market was in from the lows down around the 1737 level. And we were looking for a potential change of trend. This was a potential Japanese candlestick, a type of hanging man type pattern. And if you recall, as with any reversal pattern, we always require confirmation. So we have the setup for a reversal when we see these patterns occur, but we always require confirmation. We never act on them until we see confirmation, and this really highlights how important it is to wait for that confirmation. We were looking for a lower high and a lower low. The market opened up very, very strong. Opened up above the 1800 round number level of resistance, and here in the recent past and for the candle from the previous day's trading, we've seen that the market was unable to penetrate that. Today we've taken that out in a very, very bullish manner, with the buyers have closed with strong control and they've been strongly committed to taking this market higher. The buyers were that strong they even took out the 1813 level, which was the previous resistance and support level, and they also interacted with the top of the cloud. Now the worrying factor here is that the market was unable to close above the Ichimoku cloud. So there is some doubt about whether this trend will continue. So how the market reacts to this area around the top of the cloud for tomorrow's trading, it will be up around that, roughly about 1823, and we should be watching the high of that current candle at 1823.54 for continuation of the trend, or we should be looking for potential rejection from the cloud in a more serious way than we saw today with this small shadow on the top of the candle. If the market does come off, we should see perhaps some support around 1813 or even down around the round number 1800, so resistance can turn into support there. But very, very important trading coming up for the next day. In terms of the Fibonacci extension, we're examining the relationship of this first time frame uptrend to the previous time the market is trending up, and I think this really shows how strong this first time frame uptrend has been over the past week or so. Travelled through the 161.8% level in a bullish manner, and now through the 261.8% level in a bullish manner. The 423.6% level is way above the major high at 1850. Unlikely that we will reach that all in one first time frame uptrend, so it's rare for markets to get up to that level. It's not beyond possibility, but not a very strong possibility that we will do it. With the strength of this market, we would expect to see something of a rest from the buyers, some profit taking, or perhaps some slight selling to come into this market. But we can't preempt the market. We're going to wait and react to the market as we see it trading. Looking at the Fibonacci retracement, we've traded through the 100% level in a bullish manner now. We have a target at the 161.8% at 1836.38. Coincides with a minor swing low here as the market came off the major high around 1850, and that's probably a more realistic target at the moment if we do break out to the upside. In terms of Ichimoku, a neutral market in big picture terms by still trading within the cloud, but the market is building some solid momentum. There is a possibility of a breakout, so we will be looking for that to occur. As I've suggested with other markets, if we do see a bullish breakout, initial breakout, we want to then see another candle follow through in a bullish manner, and here we saw a previous breakout down below the bottom of the cloud, and we didn't see that follow through. We saw the buyers come in strongly, so if we do see a bullish breakout, we want to see confirmation of that. So let's not just jump in if we do see strong buying coming in straight away in the market, closing above the top of the cloud. Trading up above the Kijun-sen and the Tenkan-sen, so a bullish market in the medium and fast term time frames, but the Chikou span is just below the corresponding price action, so it's suggesting that there is still some slightly negative momentum in this market in those bigger picture terms, and confirming pretty much what we're seeing with the longer term time frame. And I suggest if we do see the price action break out in a decent manner up above the cloud, then we could see that indication turn to positive as well. One thing to watch out for here is that the Kijun-sen is pointing flat, and when that turns flat price action can be attracted back towards it. And we've seen that from these lows down around roughly around the 1730 level, attracted back towards there and through there, and there is still a possibility we could be attracted back towards there. It's trading down around the bottom of the cloud at the moment, and does strengthen the amount of support that we do have down below that 1800 level. But moving forward for tomorrow's trading, really the top of the cloud here around the roughly 1822, 1823 level, and the high, which is at 1823.54, become very, very important if this trend is going to continue to the upside.